Day 2 of the PDAC, the world's largest mining convention here in Toronto, and my next guest is David Gurwitz. He's the managing director of Charles Nenner Research. They called the top of gold at 1900, and where does he see it today? David, thanks so much for being with us.
Thanks for having me again. We see it bottoming this summer based on our cycle work, which I believe you guys have a chart that I'd like to show your listeners.
Yeah, and we're going to pull that up, David. So let's talk about this bottom that you foresee. And some analysts have said, look, it's already happened, but you say not yet.
Well, we said there would be bounces, but a tradable will only be not until July for gold and for silver.
So what's going to cause that bottom?
We think everything's caused by cycles. We're a little different in that regard, but it seems to work pretty well. We take any data series, stocks, bonds, commodities, currencies, economic indicators, and we try and find repeating top to tops. For example, let's take gold. If gold topped every 5 weeks, every 20 weeks, every 37 weeks, you wind up getting, in effect, a bunch of EKGs, sine curves, and we superimpose them and find when they're all topping or bottoming, and we think that controls everything.
And David, when you say bottom, what trading range are you looking at?
Well, that's a separate algorithm. Not only does cycles give us levels, then we have a target algorithm that gives us, cycles give us direction, We have a target algorithm that gives us levels. It could go down to 1100 again. We're not sure if it will, but we believe these are only bounces until July.
Now, how about for silver?
Silver, well, we called it around top 49s, down into the 20s. Silver right now is weaker than gold, but we think longer term might be stronger.
Do you think after the bottom we'll have a turnaround for gold then?
Both. The bottoms for gold and silver and platinum and other things will go up back to their highs, we think. It won't be rocket back, but we think it'll go back to their highs.
Now, David, we're at the PDAC. Obviously, mining stocks are the talk of the town. How do you see those set up?
Well, first of all, I have learned a lot here, seeing what it's like when we see numbers and we predict based on numbers, which we seem to be right, but we don't know why. Someone was just telling me about peak gold, just like peak oil. There's been and he was explaining to me, a very brilliant man. There's a lot of smart people down here, by the way. A brilliant man was saying that 2 years ago, the development of gold mining reached a level that they were getting a lower level of quality of gold, and so that was one of the reasons the price went down. I said, we called the top. We had no idea why that happened. He said it coincided exactly. So I've learned a lot about the mining companies here. According to us, we also do cycles on the mining companies, and your listeners could write in and get samples of our work, charlesnenner.com. We think they're going to be similar to the gold.
So David, last question. What are you liking these days?
Well, bonds, we called from the top because rates are still down into the summer, although long-term bonds are going to be very bad. Stocks right now, after a run-up of last year, we think is going to be a short-term down move. We think crude might go past even up to 122, which means geopolitical risk. We think that there's a bunch of things in the currency sector. We cover everything, so that's why people have been out of gold thinking, I think most of them are going into stocks. I think that's going to change, and I think those who are in it physical should stay, and those who are planning to buy should not jump in right away, but we like the nat gas and crude at the moment, and other things that people are invited to come and write to the site.
David, thanks for your thoughts today.
But it's my pleasure as always.
And thanks for watching our coverage from Day 2 of the PDAC. We'll have more for you. In the meantime, email us questions, newsfeedback@kitco.com, or follow me on Twitter at Daniela Camboni. Thanks for watching.